The SEC is trying to smooth the path for companies that are considering going public. Under a new proposal, all companies would be allowed to talk privately with potential investors before making a final decision. The goal? Boost the number of public companies. Bob Pisani is here at Post 9 talk about what this is and what it means.
Yeah, you know, somebody once said everybody complains about the weather, but nobody ever does anything about it. Everybody complains about the poor IPO market, and nobody's done anything about it for years. Clayton has made it a centerpiece of his administration to try to do something. So this is pretty modest. Basically, companies could go out to potential investors and describe what they're doing, give them information without tripping disclosure laws that they have to do now that would require them to put out public information and reveal very important parts of their businesses, and then they may or may not go public. That's a problem. So you can have a discussion now, gauge investor interest without tripping the disclosure laws. This is modest but an important step. The bottom line is this: why is there no companies going public anymore? There were 500 that went public in 1999. All right, that was the biggest ever. Last year there were 200, but that's about the average. We've gone from 500 to 200 pretty much the last 20 years or so. And why is that happening? Number one, it's too expensive to be public. You, David, have been talking about the regulatory requirements of going public for 20 years, as I have. It's crazy. If you're a small company, the sheer legal costs are going to overwhelm you. Number two, it's easier to stay private. Why shouldn't you stay private with the ocean of private money that's out there? And we had about 10 years ago, there were changes in the laws that made it easier for private companies to do private placements with qualified individuals. So go out and raise oceans of money and stay private. And finally, and David, this is your field.
Yes.
Why go public when you can merge? M&A is a more desirable option for most companies. Why not sell to IBM or Cisco than go through the whole problem of going public? And Clayton's trying to make it easier for companies to go public. I think it's a great idea.
A lot of companies do have a two-pronged approach. Either we'll sell or we'll go public. And they do choose M&A, as you say, sometimes. The private capital thing's the most important, I would think, right? I mean, the fact that that didn't exist 10, 15 years ago, and certainly not in the liquid way it is now, where you can really have access to significant amounts of capital.
Right. Think about what this does to the public market. So you have all these companies. You have Uber private. Uber did its first round of funding, was it 2010, I believe it was? They did the angel investing, I think, in 2010. They have been private for 9 years. The public has been deprived of all of the upside, the early growth momentum of a company like an Uber and a company like a Lyft that it never would have had before. You wouldn't have companies this scale being private for this long if it hadn't been attractive for the companies to stay private.
The flip side, though, is do you want to get back to the 99 levels where 500 companies went public, and what happened to those 500 companies that went public?
You had a lot of creative destruction, yes.
Exactly.
And a lot of
so
them
you're
failed.
exposed to the upside, but you're also exposed to the massive downside that we saw.
And we did have the internet bubble. Of course, that was the whole internet, the first wave of internet speculation. I'd rather see that than a company say quietly private for 160.
You'd rather have an internet bubble 2.0?
I'd rather see all of that debate happen in public than private. And look how little we know about a company like an Uber and a Lyft, for example. There's the lack of transparency with the importance of these companies. They're doing it, but most of the other companies are not. I'd rather see the companies public and know a lot more about what they're doing.
In a different environment, though, Bob, this could have been perceived as these companies now have a track record. They have a track record. They have financials to show you versus the companies that are so early in their lifespan where they don't have that track record.
Yeah. One final point about this that people always ask me: why is the market bigger if there's fewer companies out there? And it's true. There were 8,000 companies 20 years ago. There's 4,000 today. It's literally half. And yet the market is much bigger. And that's because of technology, companies have gotten much bigger. I mean, look at the market capitalization of the S&P 500. The top 100 companies essentially control the stock market. And that's why M&A is so attractive. They have the money to go out and buy companies alternatively. So it's another problem out there. Scale of these companies enables M&A.
Trust law, which is a conversation for another day.